Now, our next guest is a good friend of Bloomberg West. Marissa Campise was a principal with Graycroft Partners and is now a VP at Venrock, which has invested $2.7 billion in 417 companies. Marissa focuses on early-stage investments, and she maintains that we are still not in a tech bubble. She joins us now from New York. So, Marissa, first of all, I have to ask you about this tech sell-off. What kind of impact do you think this is going to have on the tech investing climate, even at the earlier stages where you are?
Well, I mean, for us, we're long-term investors, so the average holding period for us is 7 years. These market gyrations don't affect us as much because we are, partnering with entrepreneurs over the long term.
How about M&A? How do you think it's going to impact that?
So, well, that's the long term. I guess the short term, it's interesting times, and one can look at it in one of two ways. I think the first way, you could possibly argue that if stock prices continue to be depressed, companies may be less acquisitive because they, acquisitions in technology often happen in both stock and cash. So if your stock isn't as valuable, you may not be as aggressive in pricing on acquiring private companies. But I think the other view is that there's $2 trillion on company balance sheets, and what are they going to spend it on? What is Apple going to spend $76 billion in cash on? So that would, one might argue there's going to be more M&A. If they take a long-term view that that the market is going to improve, this is a great buying opportunity for some.
Now, let's take a look at LinkedIn as an example, which is performing way off its highs of earlier, underperforming the S&P, but still has a market cap of $8 billion. In speaking with Vivek Wadhwa, a commentator we often look to talk about valuations, he thinks that's a sign of a bubble. What do you think?
So I love Vivek Wadhwa. He's fantastic. So a few things. First, I'm so tired of hearing about a bubble. Just because a few companies are trading at above average multiples, it doesn't mean the entire technology sector is trading at unsustainable levels. In the case of LinkedIn, we have a few things happening here. One, first, we should say that LinkedIn did $121 million in revenue. They have 23 million premium subscribers. They have 120 million members. I think their revenue is up 120% over last year. Active job listings are growing. So we should point that out. It's a real business model. But second, if you want exposure to the social media category, it is the only pure play at scale. Right? So you can't ignore the numbers in social. The numbers are staggering. Twitter released their blog post that they are averaging 1 billion tweets a week. With the iOS 5 integration, you can virtually share content from anywhere on your phone. Facebook, 750 million members, producing 30 billion pieces of content a month. YouTube, 2 billion views a day. I mean, there was a regime change in February. It's hard to deny the fact that social media has had, or the impact it's had around the world globally. I think someone during the Egypt uprising tweeted that, they used Facebook to coordinate events, or Facebook to plan events, Twitter to coordinate, and YouTube to tell the world. So it's hard to ignore that. LinkedIn is the only pure play bet at scale. So if you want exposure to social media, I can certainly see it, and I could justify how they might grow into their valuation with the reports that they just released.
Okay, so that said, though, you might not think there's a bubble, but if institutional investors think there's a bubble or there are concerns about a bubble, how do you think that could trickle down and impact the venture capital market?
I think the market's so big to say that there is a bubble across the entire market. I mean, some segments are performing better than others. I think it's unfair. How do I think it impacts early investment? Again, it really doesn't impact us for the long term. We're long-term investors. We look for good opportunities, exceptional entrepreneurs, large markets. We are looking for people that are building real businesses, and we look at everything we invest in.